Yeah, so as mentioned, today we're going to talk a little bit about how to offer crypto trading in the EU in 2025 and also present a little case study. The introduction, Max already basically took care of it very kindly. But to give you a bit of background of where we came from when we originally started the business, I think it's important to understand the background of tradias. So tradias originally started as a fintech arm of a traditional securities trading bank, and our approach was to really leverage our market making and liquidity provision expertise to basically give access to this new asset class for institutional investors by making it feel and look like just accessing another asset class in a regulated environment, right? As you can imagine, when we started the business in 2020, there were many, many challenges to overcome, and we're going to talk about a few of them in a bit more detail in a second here. Some of them are still there today, to be honest, but this was really the approach. And when we started the business, we really saw not only crypto as a massive opportunity, but also the technology behind it to really have efficiency gains, as Michael already mentioned, for traditional financial assets and really leverage the entire value chain. Taking a look at the overall market size, I think a lot of these numbers are perhaps familiar to quite a few of you. So I'm not going to dive into a lot of detail when it comes to specific numbers, but I think there's a few greater trends that I would love to point out by talking about the size of the crypto market as of today. I think what we've seen since we started the business is that originally during, let's say, the last crypto summer in 2020 and 2021, we had a lot of financial institutions in Germany or Europe that were looking at the space, were somewhat hesitant to really put the commitment forward to move into it. And then I think at the later stage, when FTX happened in November of 2022, this gave people a very good reason, to be fair, to immediately pull the rug and basically stop their, let's say, lukewarm efforts to really dive into the cryptocurrency sector, right? And I think then from that point on, it was really a wait and see moment to say, okay, how's the sector going to develop? Are they able to absorb this external shock, given that it's a relatively new industry, a very globally connected industry, and how is the market going to react from here? And I think, at least from our point of view, the market has proven, and the players within the crypto sector have proven to be a lot more resilient than maybe a lot of people would have thought after the scenario. You also saw that in the pricing, right? A lot of people thought once an Armageddon scenario, like, you know, the default of the largest crypto exchange in the world would happen, that this could have basically the black swan event in terms of Bitcoin going to zero. Now that didn't materialize, right? And the sector recovered quite nicely. And I think with the increased regulatory clarity, so I'm actually in agreement with the popular opinion here that this has a massive effect on institutional adoption, and of course with the recent momentum, not only in terms of pricing but also the volumes that we're seeing in the market, both from the ETFs that are now being, of course, offered in the US, but also more broadly speaking from the broad retail sector all over the world, has made people realize in the traditional banking sector that whether you're a fan of the crypto segment or not, this segment is here to stay and it will survive, and there needs to be a way of how you can offer this to your client base. You see some of the traditional players being listed here that have made moves into that direction. Of course, I would say that the neobanks and neo-brokers are, of course, a bit more on the agile side. I maybe not having to deal with, let's say, some of the more established structures of some of more the traditional banks. But even in that segment, we're seeing the adoption happening now, and we've seen more and more players moving forward out of the trial stage really into some broader offerings for their client base. Now, needless to say, there's still many challenges that need to be overcome in order to actually have a, let's say, offering that both meets the regulatory standards, the internal compliance standards and risk standards, and then also is still enticing for the end client. Because at the end of the day, I think if your product is not competitive, and this is also something where I'm fully in agreement with Michael. I think at the end of the day, the clients do care about the product, right? And maybe a little less about the technology behind it. Then, of course, even if you tick box 1 and 2, this won't help you as much. going through some of the issues that we're seeing for some of the traditional banks to adopt crypto trading, maybe starting at the very top, stay informed about market changes, forks, mergers, etc. This is actually something that we've seen, especially when offering a broad coin range, that is extremely, extremely difficult to handle. So you got to imagine you basically have merger events just like in the traditional world, also in the crypto world. But unlike in the traditional world, when there's a corporate action happening, the, let's say, level of information you're receiving, both in terms of marketplaces that might still be able to offer trading post-merger, but also in terms of when is it actually going to take place? Did it already succeed? Did it happen? Is very, very scarce, right? So handling those sort of let's say, events is a massive headache, even for us at times, and definitely presents a massive challenge when looking at offering a broad product range in terms of crypto trading. Now, the second one, of course, stability and scalability. We still see that, especially during times of market duress, that you have outages, even at some of the largest exchanges in the world. You have connectivity interruptions. The market is still relatively fragmented, right? So liquidity is a core component, basically, for scalable offering here. So this is very, very different from a, I would say, heavily centralized system, of course, we have in the traditional world. Yeah, complex market entry and fast-moving market. I think this is, needless to say, an additional challenge a lot of the traditional players are facing. I think when you look at the speed of the development of our industry, and what has changed over the last 5 or so years, this is not comparable to usually how the traditional financial system evolves. And of course, when you have processes and procedures that need to be followed, either from a regulatory perspective or also from an internal perspective, this makes it incredibly tough to keep up with the rapid pace of innovation that we're seeing in the market. And then lastly, or not lastly, but the second last point, actually, the crypto asset coverage and pricing, of course. Now, there's been some studies being done basically that looked at the outflows of end clients in terms of cash. Where are they sending their money? This was a traditional bank or actually a group of banks that did that analysis, and they were really surprised to see how much money is already being lost to some of the, let's say, neobanks, neobrokers, or crypto exchanges that, of course, also bring in other elements. They have a very large coin range, a lot of assets being offered. They have, of course, that gamification element, maybe also different pricing structure than you would find in the traditional markets. And these are all challenges that some of the more traditional players are being confronted with. And then, of course, lastly, sourcing coins from trusted sources, KYC and AML. Now, this is something I think, of course, that is extremely important for any regulated player to know who are you interacting with, and what is the source of funds, who am I dealing with? And this is something that also presented a big challenge for us at the beginning. Now, we actually went with a gold plating approach, meaning we chose to adopt and basically apply the same standards and procedures like we did for any client that wanted to trade traditional assets. But of course, this also meant that we need to be a bit more restrictive in terms of the things that we can do within the marketplace. Now, how tradias can help and what are we doing at a high level? And again, we'll jump into a bit more detail in a moment here, but how are we trying to solve some of these issues? So I think a big element here that cannot be understated is experience, right? I think we learned a massive amount along the way, right, from when we first started and where we are today. So when the way the system and our trading system have grown, it's really a result of client feedback, of obstacles and challenges we had to overcome to enable our clients to trade crypto. And I would say, even if we said we anticipated 50% of the issues before, and I think that would be a very high number, right? So I think the ad hoc issues we were facing along the way were much higher than 50%. The result of that today is that we're offering 120 crypto assets in a flexible setup in the way you can connect with us. We are now, by 2025, servicing 15 million retail clients indirectly, exclusively. So we don't deal with retail directly, but of course, our partners, neobanks, neobrokers, they do. So with that, we are definitely the market leader in Germany and one of the largest players in Europe in that segment. When you look at our infrastructure, and I think this is another very interesting aspect that was not planned, but is the result out of the market circumstances, is that at the beginning we were looking to work with partners as much as possible when it comes to the IT side. But when we looked at the landscape a few years back, we saw or found that very few players were able to meet the regulatory standards and also the tech standards that we needed to build a scalable business. And the result of that was that we built a lot of our existing infrastructure in-house, which actually today is a big advantage because it just makes us a lot more flexible in terms of the way we can adapt to changing market circumstances. Yeah, in terms of the client base, I think we've discussed this. I think what we've seen in Europe is that the market has been so far very, very heavily retail driven, right? So a lot of our setups are B2B2C setups. Now, I do believe that we'll see the pure B2B model and more large institutional players coming into the market slowly. But of course, there are completely different challenges that need to be tackled there when it comes to settlement, having the infrastructure ready, the reporting and whatnot. So yeah, definitely, I would say that the retail market, not surprisingly, in Europe was a first mover in that instance. Moving on in a bit more detail, how does our setup look like and what do we actually offer to our clients? So starting on the left side, in terms of the business model and setup, we operate as a BaFin regulated principal trading desk. So we're a fully licensed securities trading bank, meaning any price that we stream to our clients are our own principal prices. We're a market maker. We can take a certain amount of risk. And this, of course, provides many benefits when it comes to pricing. The second big point I would name here is that since day one, of course, given the institutional focus that we had, we have a very flexible setup when it comes to both top of the book pricing, but also deeper liquidity that might be needed. Now, to give you maybe two very extreme examples here, on the one hand, we have, of course, some of the neobanks and neobrokers where maybe it's important to price very efficiently some of the smaller tickets and have a very strong top of the book pricing. And then on the other extreme hand, we have also some states that we have corporations with, basically that use us to sell off confiscated cryptocurrencies where we have very large block orders, so to speak, and also for that we can provide ample liquidity. Also very importantly here, because this is a question we get very frequently, why don't you do custody? Now, we said from day one, we want to be focused on the trading side. This is what we know. This is where we have our experience, and we believe this is what we're good at. And for us, that meant not including custody into our offering. There's several advantages that come with this. One, of course, being that we're custodian independent, meaning that we can basically work with any counterpart on the custody side. We tend to prefer to work only with German regulated custodians, given our regulated nature, but this is a level of flexibility that, of course, we have and also enables us to have such a large coin range. Multi-asset capable platform, also very important. So while crypto, of course, today is the main driver of our revenue source and also where the client demand is, we did build a platform in a way that going forward, clients will also be able to trade tokenized assets via the same connection. So there's no separate connection needed. As we do believe over the next 5 to 10 years, we will see the adoption of tokenized assets accelerate as well. And we want to stay ahead of the curve in that segment. Integration, I think we've covered a lot of it. So we do quote prices 24/7 for the assets that we stream. Again, these are executable prices. The way you can connect to us is quite flexible. Most clients choose to use the API. We do have a front end, or you can go old school and use chat or email as well. Now, the pricing and trading mechanisms are basically automated. So when we look at the trading desk, we really see the traders as I like to compare it to pilots on a plane, right? So there's a lot of buttons there, and really they just give the overall direction of the plane, but the plane more or less flies itself. And this is how we view our trading system. And this is the only way we believe that we can have a scalable setup. And then lastly, on the settlement and reporting side, I think there's a lot of elements in here that you would be used to from the traditional world. Of course, we offer post-state settlement to our clients. We have netting cycles, meaning that not every trade needs to be settled, but we have cutoff times for the settlement. And then, of course, we also offer additional services such as reporting and compliance reports. These can be tailor-made depending on the client and depending on what the client needs. This is the last slide of the presentation. So here you see some of the things I already mentioned in a bit more detail, and this is really a core example of how the workflow works in a bit more detail with a neo broker in this instance, right? So you have, of course, a retail client that initiates a buy or sell order via the app. Mostly, we consistently stream pricing data to our client, which is in this case, again, a neo broker or neobank. The order data is being received by us, and then the trade confirmation gets sent back. Now, the important part here is, and this is really important usually for our client base, we don't know the retail client. We don't want to know who the retail client is, right? So our counterpart is always solely basically our partner on the institutional side. When you look on the right side, I think a lot of things we have already mentioned. Maybe one interesting element here is, of course, that we focus on euro liquidity from a very early stage, meaning that in euro, we are one of the top 3 in terms of pricing globally as of today. Speed, and this goes back to the IT infrastructure, of course. The system can handle roughly 200 trades per second per instance. So even if a client were to use more than that or needed more than that, we could set up a separate instance and could facilitate this. Now, uptime, especially in the setups where we have an exclusive agreement with our clients, of course, is extremely crucial. Right? Imagine the most volatile or stressful time. You don't have any prices to show for, and clients can execute trades. If you have, like in this case, 8 billion retail customers, this would provide a massive headache. Luckily, we haven't had any outages in that sense, only when we have scheduled maintenance. So our uptime is in excess of 99.5% since inception. Yeah, the lack of pre-funding, which separates us from a lot of the exchanges, is something our clients really value as well. On the bottom, you see some additional services, also as briefly touched upon, that we can handle. We mentioned the merger support and the cumbersome nature that you have there. This is something we coordinate. You have, of course, new coin listings, most recently Trump and Melania, of course, that were in high demand, given the events of the last few weeks. But also the customer support. So we do have coverage 24/7, which I think for our business is crucial, especially in the exclusive setups. And in terms of the settlement cycles, we also have a certain level of flexibility that we can offer depending on the size of the client, to make sure we facilitate basically to whatever the client needs are. With that, I would probably stop here and see if there's any questions. Max, up to you if we're doing it via chat or of course ask them out loud. But this brings us to an end of the presentation. So thanks for your attention.
Thank you very much, Chris. Maybe from my side, is there any estimate that you can give for banks or asset managers who want to start offering crypto trading to their clients? How long it takes for them to set up? Is there like an average duration?
For sure. So if we could take the average, but the average would be probably fairly meaningless, to be honest, because we see a huge deviation when it comes to sort of the time it takes to bring a client live. So the best case scenario we've had with a fairly large, and this was actually announced late last year, so I can mention a client with FlatX to zero, really from first point of contact to go live, we were able to get it done in 3 months. Which is extremely impressive, right, given the size of the organization. But of course, we've had cases where it took 2 years, right? So the range is really, really large. I think it depends on how much, I would say, pre-work you've done, right? Have you thought about it conceptually? Have you do you have an existing setup already, or is it really, the first time you're thinking about it, right? And then, of course, there's other elements that go into it. How long does the legal contracts take? That is usually one of the largest parts. And from our point of view, again, we can get it done fairly quickly because the tech integration, to be honest, is usually a rather small piece of the puzzle, right? Unless you're looking for a heavily customized setup. Yeah.
Okay, so it's not too late to trade the bull market.
Not too late. No.
Okay, good. Glad to hear.
Yeah.
Thank you, Chris.